Welcome to the Tokenization of Securities. This is webinar number 2 in a series of 9. Today's subtitle is Alt Funds and Scaling Middle Office Efficiencies. I want to say thank you to everybody here that's on this webinar today. We've teamed up with some incredible partners from Blackstone to Cushman & Wakefield to JP Morgan to Coinbase, Goldman Sachs, and many, many more, as you can see in our call today. And we're going to introduce you to throughout this entire series. The person that had the genesis of this series and put it together, the visionary, Mr. Pat O'Meara, the CEO of Inveniam. He's going to introduce our guests, and we will jump in here in just a moment. Want to remind everybody joining us now, if at any point in time you have any questions, please just put those in the comment section, and we will get to those at the end of today's webinar. Mr. Pat O'Meara, the floor is yours, my friend.
Hey, it's good to be with all of you. Thanks for joining us. Today on the phone, we have a number of our friends and colleagues and partners in the space from Apex and ADDX and Capgemini and Invesco. And we are super excited to hear from each of them. And I'll start. Oyi, would you give a quick introduction of yourself and as we go around the horn real quick, and then we'll dive in deeper.
Great. Hi, everyone. Good evening or good morning, depending on which part of the world you're in. My name is Oyi. I'm the CEO of ADDX. ADDX, ADDX, is a private markets exchange. We're headquartered here in Singapore. We've been working on tokenizing alternative funds and the private markets for a number of years now, and very, very happy to be here with the team to talk about what's happening in the tokenization space.
Wonderful. Thanks so much. Bruce Jackson is here with us from Apex. Bruce, would you introduce yourself real quick?
Sure. Bruce Jackson. I'm the Chief of Digital Assets for Apex, which means a lot. But basically, my role here is, I've been an asset manager my entire career. And quite frankly, administrators and custodians were always something that were a necessary evil. What we're trying to do at Apex is create a platform that enables our GP clientele to administer and manage their business on the blockchain, sell more product, give their clients better transparency. At the end of the day, we're trying to automate digital TA, automate digital administration. It's quite a task, but having a lot of fun doing it.
Fantastic. Thanks so much. David Reed is with us from Invesco. David, would you give us a quick introduction?
Yeah, absolutely. Thank you, Pat, and thank you for having me. Yeah, good morning, good evening, good afternoon, everybody. So David Reed, I'm part of our technology strategy and innovation group at Invesco, and we're tasked with looking at new and emerging technology and how we can adapt that and adopt that within the organization. Specific focus for me is digital assets, and I work with a cross-functional group within Invesco, from all parts of the organization, where we're looking at the opportunities for us to leverage this technology, and specifically, I think a lot of focus for us on tokenization, as we'll get to later. So looking forward to the discussion.
Hey, David, wonderful. Thanks for joining us. And Wallace is joining us from Capgemini. Thanks so much for being with us. It's a pleasure to be with you. Tell us a little bit about yourself and what you guys are doing at Capgemini.
Sure. Hi, I'm Wallace Chan. I'm the global head of DLT and digital assets at Capgemini. We help our clients digitize and tokenize their traditional assets. And we help them figure out how to leverage the distributed ledger technologies to improve their traditional business and accelerate their journey into the digital space.
Fantastic. What a pleasure having you on. Thanks so much. And then from Inveniam, we have Carrie Rudy, who's the president of Inveniam, and Sanjay Vatsa, who's the president of Inveniam International. And My name is Pat O'Meara. I'm the CEO, but I really do whatever Carrie and Sanjay tell me. And we are in the business of facilitating real world assets or alternatives, whether as individual assets or as funds, being listed in a manner where we can connect back office data, digitize that entire middle office experience, and feed it into new front office solutions, right? And that front office solution may be tokenization, it may be new forms of collateralization, it might be DAOs, it might be leasing structures that are being created, but all sorts of better accounting, new forms of distribution, as well as secondary trading. And so these are all front office solutions that a lot of people are chasing, as we see in crypto and Bitcoin, the 24/7, 365 trading of those assets. And we see that instantaneous and final settlement. And we say, how can we have securities trading in that technologically advanced, high functioning status where you have new financial institutions that have come into existence in the last 10 years, some of whom have north of 100 million individual unique client accounts, or unique clients, with well more than 100 million of client accounts. And that is eclipsing what we saw traditional banks in customer growth and acquisition. And these new mechanisms are going to drive, we believe, the next generation of investor, but also this current institutional investor having greater access and efficiency around their data. And so, Oyi, I'm going to go to you first, if we can. Tell us a little bit about what you've been doing at ADDX and ADDX in Singapore. You are a leader in the space. You've been listing funds, tokenizing them for a while now, and you're doing it in some really novel, creative ways with really some fabulous clients. Tell us about what you're doing and where you're finding some success right now.
Thanks, Pat. You are really, really too kind. We at ADDX here in Singapore really started out thinking about how do we, actually it's a bigger business problem, which is how do we democratize private market investing for the average individual, right? And we all know that everybody says, oh, alternatives are actually not for the average individual. It's too illiquid, it's too structured, it's too big a ticket size. But in reality, that is really because there was no technological solution for some of these issues, right? If you think about a 10-year closed-end fund that is a private equity or VC fund, there are all these inherent structural issues that made individual investing quite difficult. But I think what was happening over the last few years is the advent of blockchain. And we saw distributed ledger technology as really a way to solve some of these complex financial product issues. And we adopted blockchain. We said, look, we need to create a few things. One, we need to create fractionalization capability, and we needed to create liquidity, because then it makes sense for the average individual to hold a piece of a private equity or fund or a VC fund, and that makes sense to their overall portfolio as an expression of alternatives. And when we brought that, access became quite available, because the number of fund managers who also saw the trend of moving from institutional investors towards wealth, and they really need to think about the path for alternatives to be distributed from the traditional sovereign wealth funds into wealth. And so over the last 3 years, and we kind of clawed every single fund, we worked through the legal implications, the technological implications, the post-asset servicing implications. And I think our broad conclusion is that blockchain actually is a very powerful layer of technology, and it can be taken from what is the traditional cryptocurrency setup and force that across securities tokenization and actually sort of make every investor's wealth portfolio much, much more powerful by the addition of alternatives. And whether you're a smaller investor or a larger investor, add that liquidity and that accessibility and the fractionalization capability to that. So we've been very grateful. We work with global names like Hamilton Lane. We work with Partners Group. We work with KKR, a number of these global GPs who are also quite keen to expand into the space. We work with VC partners as well. And we think that distributed ledger is the beginning of moving into TradFi and really experimenting towards securities tokenization, and how do we expand that not just for the average individual, but actually across institutional investors as well.
And if we think about not just this expansion of the market of who can buy it, and but also within institutional players themselves, if we can aggregate liquidity across silos and across regions, that is a mechanism that brings opportunity where investors can seek alpha, particularly as you list tokenized assets in multiple jurisdictions around the world, right? And so you are an access point for Asia, right, for European and US investors. You are an access point to distribution networks for those. And as you do so, talk about what those clients that you're serving, both from the Asian community that wants to buy in Singapore, in your region, that wants to buy assets, what data do they need to see? How do you service that asset post-trade, right? What is secondary going to look like trading? What does primary look like? I mean, these are, and then, but also the GP, what are you selling them as you give them access to your region?
So that's a very interesting question. I'm quite sure we can talk about it all night. But in reality, for individual investors, and I sort of differentiate that across institutional investors, they don't necessarily always have the luxury of data. And what's happening is that GPs who want to distribute to wealth have also to learn what is the data that's important to wealth. And as I mentioned to you, fractionalization is one aspect, but liquidity is one of the important aspects. Not that we need full liquidity, but the idea that an investor could be monetizing the asset as they need to is an important point. Therefore, valuation becomes an important point, because we don't know when an individual has to actually monetize that asset. And so the accuracy of valuation and the frequency of valuation becomes very important, because how does an individual decide what is the price to buy and what is the price to sell? There's always a reference point. And with underlying assets, especially the liquid one, it is important to understand what are the dynamics that go on in that base level of information. So one, it is information that flows into an appropriate valuation point for an investor to make an assessment of a value at any one point of time. And that was never so important for institutional investors, because they were not looking at potential liquidity at a short amount of execution time. It is important for the average individual when they do, for example, anybody needs to make a decision on buying a new house, or kids going college, or rebalancing their own portfolio, very much unlike an institutional investor. And so valuation information becomes much more important from a frequency point of view, right? So that is a very important data point. The second data point is just general notification disclosures. How is the fund doing? And the constancy and the consistency and the accuracy of information is also very important. And so where frequency and accuracy didn't used to be that important to an institutional investor, it is very much important for liquidity and an individual investor who is looking potentially to monetize, at different times of the cycle of the life of the fund.
That's awesome. And I would add auditability and traceability of that source data, which blockchain helps with dramatically. And I'm going to use that as a tool to bring us directly to Bruce at Apex. And Bruce, Apex has a unique breadth of operations in alternatives, right? I'd like for you to start with a little bit of telling the people who are on this webinar about the size of Apex, the size of your operations, the breadth of that, and then what are you hearing from your market, and what do you as Apex perceive as the opportunity around GPs with regard to digitization?
Right. So Apex, we administer about 3 trillion in assets. And if you take out ETP platforms and SPVs, it's probably about 2 trillion in illiquid funds managed by our GP clientele, private debt, private equity, real estate, and infrastructure. And we are convinced that that client base will eventually, short-term, medium-term, whatever, they'll embrace blockchain as a much superior platform for administering what they're doing, because it'll enable them to sell more product. It'll sell more product because their clients, the LPs or the person sitting in front of their RIA, will have the prospect of liquidity. They'll have transparency. We have other ways of bringing liquidity, but they're expensive. This is by far the most elegant solution, and I talk as a career asset allocator of alternative strategies for institutions. So back to Apex, we're looking at our client base. What are they going to want? They're going to want liquidity. Well, if we didn't have ADDX and other regulated digital asset security exchanges cropping up, we would never have liquidity. So that's an important starting part. Work backwards. Work from where the client wants to be. They want to have liquidity. They want to have integration with a really transparent solution, because the GP sells more product by offering these things. So you don't get liquidity without a way of pricing, valuing formerly illiquid, now liquid assets. Apex, as you know, we have a lot of things, but we also have a lot of relationships. That valuation we get through our relationship with Inveniam. We rely heavily on Inveniam to enable our clients to value, to price a fund or an asset before it gets liquidity. So keep working it back. Our goal is as an administrator to be able to automate the digital transfer agency, all the functionality. Think of it this way. If a tokenized fund is going to trade on ADDX, it's going to be valued by Inveniam. That token has to contain all of the information in it from the outset that enables cross-regional transfers. So whether it's going into Singapore or the Middle East or Germany or Switzerland or Americas, the token has to contain, let's use terms that all of our clients can relate to. Macros. It has to contain basically smart contracts, if you wish, but they're really macros. And what they're going to do is they're going to execute action items down the path. So as administrator, we do a lot of that stuff all day. We have 10,000 people executing action items for our clients. We want to automate that. We want to be able to get ahead of what we know will be a tidal wave of demand once we show this incredibly elegant way of managing a fund management business. So keep working backwards. We're going to have liquidity thanks to ADDX. We're going to have pricing that enables the liquidity. We have to have digital custody in there because governance is everything. Governance is growth. But it all comes back to the token. So the way that you onboard that data, we've put a lot of time and effort into, it sounds kind of mundane, but creating a very, very powerful onboarding platform that enables us to deal with one of my biggest beefs as a former asset manager, which was giving the same information 3 times for the same trade, right? So we are going to enable our clients, our GP clientele, to give that information, populate the administrator, the custodian, the bank, and the token with the same information grab. it's a really important end-to-end process, but none of it happens unless you get the information correct at the beginning. None of it happens unless all of the elements that are involved are actually on chain, right? Not pretending to be on chain, not on the sidecar, actually in a regulated blockchain environment. That is the power of this tool. So, so Apex, yeah, we're a large firm. We have a lot of administered assets, but we have a lot of relationships because regulated environments, unfortunately, are few and far between right now. That we're a global firm, so we're ambivalent as to which region we deal in. We're going to deal in regions that have the best regulatory environment, like Singapore. So as we pull that back, we need lots of relationships because, at some point in time, the uncertainty stops most things from happening in the investment world, certainly in this space right now. What we're discovering is that partnering with other highly regulated, highly governed partners like Inveniam, ADDX, the partnership, let's call it going into the battle together, brings much more certainty to the end client, certainty of being able to actually execute, but basically certainty that we're sort of all in this together, and that's kind of how that's a bit of the theme right now. Is we find that we are spending a big part of every day talking to other service providers of how we can work together.
Hey, thanks. We have a question being asked. Are we talking about public blockchains or private blockchains? And the answer is yes, right? So Inveniam is, we say we're chain agnostic and chain promiscuous. OIE, and what you guys did was really fantastic, starting with your own hard fork of Quorum, right? That you guys did, and so you're using your own version. We're doing a lot in permissioned and permissionless chains. So Inveniam, we're on 11 different chains right now, whether it's Accumulate or Polygon or Tezos or Ethereum or Hyperledger Fabric or R3 Corda, BNB. There's a ton, and I'm forgetting some already. But this was really good. Thank you, Bruce. Why don't I pause there for a minute?
Pat, can I make a comment on that for a second? The private
Please.
versus public. So the major distributors, the JP Morgan on down, take all the money center banks, take all of the, and various other entities in the business. They've embraced private chain because I guess it sounds like in writing it provides better security. Look, the reality is the blockchain is if everything's actually on the blockchain, it is secure. You can't erase it, you can't reverse it. So, Pat, I think what's happening is there are enterprises like the big banks that are creating their private chain environment. But we all know ultimately we don't achieve this liquidity and distribution we're hoping for unless it all connects at some point. It has to connect ultimately through the blockchain. So whatever's happening now, it's just a holding pattern. Ultimately, it has to all connect.
And that multi-chain reality is happening. And I remember back in the day in the 90s, and Carrie remembers back in the day, and Sanjay really remembers back in the day. But when the internet was coming, every bank was building their own VPN, and they were touting that and how important and how powerful that is, and they were maintaining it. And then they just realized we just are going to use the internet, right?
Yeah.
And a lot of private chains is that mechanism to onboard. Now there will still be private chains going forward, but the reality is it is a transition. And Wallace, we're going to ask you to weigh in on this in a minute, but I'd like to go to David at Invesco first. So Wallace, thanks for waiting on us. But David, talk for a minute about what you're doing at Invesco and your interest in tokenization and what steps you've made to get there.
Yeah, thanks, Pat. So we've been
David, I
Hey, David.
apologize. We've got a really bad connection with you, so I'm going to open up your mic one more time and see if that's any better, okay?
Is that better?
Unfortunately, no. You want
David,
to try
we're going to
Wallace?
ask you to log out and log back in, and then Wallace, we're going to go to you. What a pleasure to have you. We're so pleased to do this. I'd like for you to talk a little bit about your practice at Capgemini. What is your client interest that you're seeing today? And then I'd like to hear your view on the public versus private conversation we were just having.
Oh, sure, absolutely, Pat. Yeah, so we're working with a lot of the leading financial institutions in the world, and what we're seeing is, a lot of our clients are interested in the space, whether it is to, speed up the settlement or to, better manage the counterparty risks. And there's all different kinds of use cases, but really, I mean, they're very interested in this space because the tokenization can really help them speed up a lot of the processes that they have in place, whether it's lower the transaction fees, or increase the liquidity, or things like that. We have worked with, a lot of the CBDC space, and folks are really interested in, tokenize a lot of these assets so that we can move the assets faster. This space is very interesting, and there's quite a bit of a challenge, like Pat said, in basically creating environment where the on-chain and off-chain will integrate with each other, and across different blockchains where you have multiple protocols, and you want to be able to move assets seamlessly from one chain to another. So those are really challenges we're seeing, and with platforms like Inveniam, we are able to, I think this is the future that we're moving towards, is a multi-chain environment where people can, different blockchains can talk to each other, and it no longer becomes kind of a closed-off environment, which is some of our clients are still having these days. So yeah, I would agree with Pat that this is a transitory phase, and eventually we are moving towards a multi-chain environment. And the other thing that we're doing is, monetizing, helping our clients monetizing their data assets. So, a lot of these data assets are proprietary. They have PII information, first-party data. So it's really tough for them to monetize, this type of assets in the past. But with tokenization, suddenly you have, fractional ownership. You can have, you can move these data assets and be able to understand how these assets are actually being used, because a lot of these things are recorded on the blockchain. So it's a very interesting space, and certainly, we are seeing a lot of interest in this space, and not just your traditional proprietary data, but also things like synthetic data, alternative data. And those are, emerging spaces where we really want to help our clients figure out how to leverage their existing assets and turn it into a real revenue stream.
I think that's great. Sanjay, you were gonna weigh in on something. I'm sorry if I just jumped in front of you, buddy. Were you?
No, you did not. But I can ask a follow-up question. But please go ahead. You were going to ask David a question, right? And then I go back.
Fantastic. Okay, David, Wallace. Thank you so much. And David, I want to go to you. And I'm sorry that we put you to the back end of the line here, but boy, I'd really like to hear about what you're doing at Invesco, and where you've engaged in this process, and how far along are you in this investigation? Because you've been at this for a little bit, and you've been doing a lot of testing, and I, from our standpoint, boy, you guys seem like leaders in engaging and getting yourself ready to operationalize.
Yeah, sure. And is this better? Can you hear me okay now? Is that okay? Good. Apologies for that. Yeah, as I said, we've been looking at this space for I think we did our first internal proof of concept back at the end of 2019. So and I think one of the things we found at that time was the tokenization in and of itself was not the problem. It was what did you do with that token thereafter, and the world has moved at pace since then. So really, where we are today, we have this cross-functional group where we're doing some work in the crypto space. I'll just allude to that because it's as an investable asset. But I think we are, we see the real growth here in the disruption ability for DLT as a technology across all of those value chains and ecosystems. And then tokenization really is an evolution of the sort of product structures as we move forwards. And in common, I think, with many of our colleagues and companies in this sector, our initial focus and the biggest opportunity for us in the near term is in the private market space. So we have a very successful global real estate franchise and global private debt franchise, and those products, it's been difficult to get mass distribution of those products because the client engagement is nowhere near as efficient as it is in the public marketplace. Is that to some degree that whole onboarding process for clients has been a barrier to adoption, I think, as we've moved forward. So we've got a real focus now on how can we leverage this technology, one, to have a much better seamless client onboarding and engagement experience through the use of this technology. But secondly, we've got a number of different private market capabilities spread across our global footprint. So, the Americas, EMEA, Asia Pac, and we've taken, necessity. Historically, we've had a different approach to those things. So they've kind of got different operating models behind them. If we can bring together a common operating platform for how we present these products, we can use the power and the automation of smart contracts such that as you engage with these products, you're only presented with those that you're eligible for from an investment status and a regional jurisdictional standpoint. We think we can get a load of economies of scale and synergies in terms of how we administer and operate those products. And then there's all these additional benefits, and Oyi summed it up beautifully earlier on. I mean, the ability for the secondary trading at the moment, you've got an investment in a product for whatever reason, you may want to reduce some exposure or change your exposure. That's a difficult and quite complex process. The ability to go to to a secondary market where you can, you're presented with a marketplace effectively where you can trade those assets, then starts to drive us towards this democratization of access to these marketplaces. And I think it's then only a matter of time until those benefits start to move towards the public market space.
And I think that when we look at some of the headlines, even in the last 4 or 5 weeks, right? If you're a smaller GP than, say, Blackstone, and you do not have as good a relationship with CalPERS, and you have interval funds, you're scared to death, right? Because that run by, on BREIT as an interval fund where they had redemptions coming is driving conversations to us right now about how do I get my fund middle office in order so I can tokenize an asset so it can be listed on an exchange that is an interval fund that has all of the data maintained by Bruce and Apex, et cetera, so that they can have that type of liquidity. And I think as you talk about secondary liquidity, whether you're talking about open-ended products, whether you're talking about interval funds, whether you're talking about closed-ended, all of this interval stuff, new mechanisms for distribution with auditable data and third-party marks on a monthly or quarterly basis is going to drive the ability for secondary markets to create relief for these GPs, some of whom are having existential type questions, right? Can they stand a run, where they don't have a backstop like that? And that secondary trade is a brokered trade by Evercore that has a really long life, and in order to clear the trade. And so this is creating opportunities. So we couldn't agree more, David, with what you just said. I think it's important to note there's a lot of a commonality among this whole crew where we talk about ecosystem and multiple firms working together and broadly connecting these assets, where you're talking about front ends. And this is a concept of a microservice, right? Where there are microservices from a technology standpoint that band together to facilitate what has historically been a monolithic activity within a single institution. But now you're going to have a number of different institutions and capabilities strung together to clear a trade, to settle a trade, to distribute an asset, to provide secondary liquidity across jurisdictions. And they're going to be working together. And there is a coopetition that exists in a DeFi or open environment where you have partners, and that your partners are working with you, but you also know that they're working in a fully open environment. And just for sake of good hygiene, Apex, Bruce's company, is an investor in Inveniam. We have a strong relationship with ADDX. We have good relationships with all of these folks. Tokeny, that I sit on the board of, and Inveniam's an investor in, is working with you, David. I think you guys have made those announcements. These are exciting things, but it is an ecosystem that's developing, right? And I'd really like to hear from anybody about your concepts or your thoughts on the ecosystem itself.
Can I sort of quickly touch a little bit on the piece on liquidity, Pat? I think the issue is that people don't realize that they need it until they need it. And so for years, right, these open-ended structures, even the closed-ended structures, everyone was sort of happy to live in what was traditionally not particularly tech-enabled, but also not informationally enabled. And so, today, when you suddenly face, we've gone through a big cycle of we've gone through a big up cycle. And in a down cycle is where all these things get challenged, and liquidity suddenly gets asked a big question: where is that liquidity? And you don't prepare, right? You don't have the information, evaluation, you don't have things that will allow you to trade secondary. And now everyone's sort of deer in the headlights going, oh my goodness, where is the information for liquidity? And where is the liquidity when I need it? Because a semi-liquid solution is not the best solution, because people got to queue 3 months to get liquidity. And so secondary, but nobody paid attention to that. And when these cycles come, you get caught very much stuck in between. But so just wanted to make the comment there.
That's so apt. I mean, what we are finding is that in difficult times, tokenization resulted in the delinking of optimizing the investment from the investor optimizing their investment into that asset. So that's the biggest thing that has happened. And of course, now more people can participate in the financial inclusivity and democratization of alpha. But I think what we are finding a lot, at least in the Middle East, and I'm pretty sure it's Singapore, at least in India, where LPs, and especially under the Sharia law, demanding liquidity. And they're asking for at least the opportunity to have a platform where they can adopt and have liquidity, whether liquidity is available or not. So I think a lot of people are moving towards walled garden-based liquidity, where they're bringing their LPs in their own structure, and they're having the 20, 30, or 50 assets and they're tokenizing those and making them available before they open it up for the rest, right? So they're actually putting their toes into the ground because the LPs are driving and demanding at least a platform where they can have the possibility of liquidity, and then finally liquidity will happen. So we are seeing that over and over happening, and that's been a trend that's changing over the last 90 days. It's what I've noticed very noticeably.
Thank you, Sanjay. We are seeing that, and we're seeing these real steps towards tokenization by, the largest of institutions, whether it's an Invesco, whether it's a number of Bruce's clients, Oyi's clients. You know what I mean? We're seeing this significant secular trend, right, where the interest level has picked up dramatically. And I would throw this out to the whole group again. Talk to us about where you're seeing demand this year versus last year, right? Is there a pickup? Steady? Is it going down? How are you seeing? Has it gone from interested to execution? Talk to me about the evolution of not only intention but actual will to drive outcomes, and where are we in that cycle? And I open this up to any of you.
Yeah, Pat, I'll throw.
Sorry,
After
you.
Go ahead, David.
I was just going to say, just briefly, and I think
we apologize. For some reason, the mic is it's being temperamental with you. So if anyone else wants to jump in on that, that would be great.
So,
Hey, David, there's a half-life of every time you call in. So we're going to have you log off and come right back in. Bruce, you got the mic until David gets back.
Just a couple of things. So, what we're seeing, not surprisingly, they're bringing us our clientele are bringing us their wounded and their crippled. They're asking us to help solve a fund because you said, okay, this is wonderful, this is all great, but can you tell me the process of tokenizing this private equity fund that has an undrawn commitment? How are we going to provide liquidity in a fund that has a committed partner and asset part? Okay, don't have the answer yet. All I know is that we're working on that. But and just back up. So as an asset manager, I was always very aware that the market participants that really held the hammer were the distributors. It was the investment banks and the big distribution platforms who charged for distribution. Ultimately, when the market is at the point that it has their attention and they can do origination of new product into various markets because they know that they have regulatory environment there and they have liquidity platforms like ADDX to provide secondary, great, they're in. So what I'm seeing an uptick of very recently, which is really encouraging, is I've had a number of these larger distributors reach out to us and say, okay, you guys have been running tests with various GPs, etc. Let's integrate a test to our level. Okay, how are we going to distribute this product? How are you going to create it in a way that we can simplify the process for our clients to buy it? So what we're really, I think that's another level of interest in that some of the big distribution companies are now talking to us about, I said, yeah, we get it. Everybody's circling. Everybody's coming up with their strategy. We know it's going to be disruptive. We don't want to be last. But quite frankly, as a distributor, we just want huge fees for initiating new product and then for trading existing product. So let's do a what if on how we're going to integrate with Apex to bring your product flow to us for distribution. So the mercenaries are out, which is good. I'm really happy to see it. That's very encouraging. Unfortunately, we're all waiting for regulatory environments to develop. I'm glad the UK has given us a timeline to get something going there. But yeah, so the distribution interest is what feels different to me.
Bruce, if I may just sort of jump in very quickly, having looked at a traditional, very large distributor, and the way I describe it as the issue is actually managing alternatives at the distribution level is actually very complex. And so the operational capability for any distributor to set up, to be able to manage the asset servicing of a variety of alternative assets is actually very expensive. So first of all, if you think, all of them have to pay for the operational capability of really I don't know, I mean, in some of the larger banks, a few hundred, 1,000 team of operations team just managing 5-year funds, 10-year funds, open-ended distributions, capital calls, corporate actions is huge, right? It's a big percentage of the fee. So when you say fee that needs to be paid, I believe that a large chunk of that is due to operational capability. And then the second large chunk is obviously the selling piece, right? I mean, you need to pay the bankers to sell the product. But if you could solve some of that operational capability with DLT, I think is a very powerful capability of that. And so the distributors haven't really come to that realization. So what we're seeing is that the younger distributors, those that are sort of quite new, and they're starting from scratch and they're building a new technological platform, they're already directly coming to us and saying, can you provide the backbone, not just the liquidity? It's not just the liquidity, but the operational capability to support that. That becomes very scalable and very powerful, which is why I think tokenization becomes a very big topic point for anybody who wants to bring on board alternatives as a new platform.
And I want to also talk about real quick, distribution itself has a very large chance of being remade. And I'm going to use an example. I help out at one of my son's universities, and we had about 60 of the juniors and seniors in front of the board, and we were having a discussion about crypto. And we said, I asked the question, how many of you today own crypto? 2/3 of them raised their hand. I said, how many of you own stocks and bonds? And literally like 4 or 5 raised their hands. And I said, of you that raised your hands, how many of you were introduced to owning stocks directly through Robinhood, which you went on for the first time in order to buy crypto? And it was half of those. You know what I mean? Like, and this is the reality that we need to understand, that distribution is going to come in new forms. Yes, the incumbents have a huge part to play, and it's good to see that. But I think that is, and I want to throw that to you, David, I think that's a big part of why Invesco wants this, because you want new mechanisms of distribution for your existing funds. Is that right?
Yeah, absolutely. I've tried a different mic combination, so hopefully we can get through this without any more problems. But yeah, I think it's absolutely right, and I think we saw this huge adoption of people getting into the crypto space, as driven through the pandemic and so forth. And there's a whole demographic of people that haven't engaged in what we might term the traditional distribution models. They've got access to crypto. They maybe now start wanting to think about how they can, get a wider portfolio, but they want to do that in the same format. So they want to have the whole ability to offer different asset classes through a digital asset tokenized format means that they can engage in that in a way that they're absolutely accustomed to. Now, that's a demographic that doesn't represent itself particularly in some of our existing distribution channels, and we see a big opportunity to partner with some of these people that have built client bases there that we could potentially then offer investment expertise and a degree of fiduciary responsibility as well into that whole conversation. So it's a significant opportunity, I think, for us as we move forward.
And just following up from David and Oi, I think if you really look at distribution, I think the generation is asking for digitization. And it's not only for alternate assets. You go to mutual funds, you go to CCAVs. If you have third-party distribution in Europe, it's the most complex. Everyone has their own rules for compliance and everything else. If that all can be facilitated through an appropriate DLT-based data operating system, you could actually deliver this distribution in a digital form, which is instant, which actually appeals to the client, actually appeals to the end consumer. So I think what you're seeing is that the distribution will become more seamless, and I don't want to use the word atomic, but as soon as you go for something, you will actually have it in your wallet. It's not that you're waiting for some paperwork to happen and 3 days later you get the transfer of shares or whatever you bought. So I think you're going to see instant gratification and instant use of it. And I think that digitization can only be enabled through DLT-based blockchain.
Wallace, let me ask you a question on this, right? We have a question that was put up by Gayton, and I'm sorry if I'm saying that incorrectly. We're talking about, and Chris, can you put that question up about interacting with tokenization and more globally smart contracts, DLT, and require new competencies? You know, from our standpoint, there are some people who are smart contract maximalists, and they think everything's going to be in a smart contract. We kind of try to take Occam's razor and say there will be an enormous amount of computation off chain, and there will be a limited number of computation in a smart contract that is on chain. And you're just going to have that auditability of where that data came from for the off chain computation, right? It's not going to be kind of building the world's largest smart contract, right? And what are those essential elements of smart contracts that are going to perform specific services processing off-chain computation? How much of, Wallace, of your practice is helping your clients think through the implementation of what is on a smart contract, what is off-chain computation, how do I deal with this, how do I build it, what does custody look like? What are your clients grappling with as they dive into this, and what is easy for them to do, and what part is hard for them to get their brains around?
You know, that's a really interesting question. We have seen, like you said, Pat, a lot of the work of transformation is actually not done exclusively on smart contracts. Yes, smart contracts is definitely a very important part of this tokenization process, but a lot of the work is actually in simplifying the process and understanding where things can be moved over, and you know what process change that needs to happen for the new tokenization to make sense and to be more widely adopted in the organization. So the skill set, in our opinion, is not just learning the smart contracts, learning how to program smart contracts, and tokenization is a lot more wider than that.
And well, it's a follow-up question. So a lot of people do not know that Capgemini also does a lot of processing. They've got about 20,000 people through iGate, which does a lot of middle office and back office processing. So, Wallace, what are you seeing on how you are driving efficiencies in your internal operations? These are for clients, that you're doing it for clients like SCI and a lot of, I don't want to name them here, but they're your clients. So what are you doing using the full thing of DLT, the data operating system, which we have spoken about so many times, to drive internal efficiencies and instant, on the end-to-end processes?
Yeah, so we're really focusing on a data-driven approach in a lot of these simple process simplifications. We looked at the data that's helping that collect the data that we have, and use that data to drive a lot of the decisions that's driving these processes in place. And then from that point on, we also simplify the processes and work with the folks on the ground, and to understand, why some of these processes are essential. What are the things that we can probably either eliminate or improve upon? And DLT is a very interesting space where a lot of the different process needs to be restructured or completely torn down and rebuilt. So it's definitely I would say a revolutionary space where a process engineering becomes essential part of this process.
we just based on time, right? We'd like to ask everybody to, if you have any additional questions, let us know. But we're going to go around the horn and let everybody ask one or two or give kind of a final comment. And Oyi, can I ask you if you'll handle this comment right here as kind of maybe your parting comment? Is that all right?
Absolutely. I think Shafiq's question is quite interesting, and we struggle with it a little bit. Yeah, and people don't sort of appreciate the crypto world and the STO world. And in the STO world, in a regulated format where you deal with fiat currencies, you're kind of faced with interaction between the chain and what I call offline. And offline meaning anything that's sort of fiat bank related. Is quite interesting. So we very proud of proving the use case of DVP. But in reality, DVP is achievable because we have clients who have to pre-fund their accounts, right? And in pre-funding their accounts, everybody goes, well, in Singapore, it's instantaneous, fast transfer. But fast transfers in Singapore only are limited at 200,000 Singapore dollars, right? So if a client wants to do a trade that's more than that, they have to go through the traditional TT route or the bank transfer route or the, God forbid we get a physical check. We have clients who actually want to send physical checks. And that takes 2 days. It is insane, right? So we're building sort of the sort of beautiful ecosystem on chain, but actually in reality there is that piece of off chain that we have to manage, and at the moment it is not perfect. My perfect vision of the world is actually where stable coins, CBDCs, become the ultimate settlement currency towards that. Because imagine the ability for true DVP where you decide to buy something, a fund, a product, a fixed income, and you scan a QR code, you transfer your funds in, you make the trade in this, sort of in 5 minutes, right? That would be my perfect example of that. We think the world is not very far away from that. So we're about to launch USDC capabilities. So we know that is going to happen. There is already a Singapore stable coin capability, which we'd love to onboard quite soon. So the vision of that, and in Singapore, we're quite fortunate because the regulators are very supportive of stable coins, and they're actually issuing stablecoin guidelines out there already, that this will happen quite soon. And I love the idea of applying that throughout our platform using either, Sing dollars or USDC capabilities.
Well, thank you so much. We're right at the end of our time, and then we're going to go through this and what you're talking about. DVD, delivery versus delivery, right? On a token versus delivery versus payment, where you've got the fiat rail. Thank you for that. And a non-central bank digital currency or stable coin that is asset backed, right? Such as a tokenized money fund is really interesting. And it also kind of serves the needs of avoiding government control of currency, right? Which is what a big part of the DeFi Bitcoin movement was at the beginning, right? And so I think we're going to see a lot of that. And I'd like to throw it over to you, Bruce. If you could give us kind of some final comments on where do you see the early adopters today, and who do you think are going to be the ones who are going to make a splash, one, and two, what competitive advantages are they going to get as an early adopter?
Yeah. So if you look at this market, like any other developing market, we're not even at the early adopters stage yet. People are just playing with it. They're testing it. I mean, institutionally. So I want to really what Oyi said. I think that we all here are dedicated to regulated market, regulated environment. So what is the next step going to be? Stablecoin is the first bit. We are going to get stable coins are going to be regulated. We're going to have clear marching orders. Then things like tokenized money market. We're going to go in baby steps, right? So that's what I see happening. I see the focus on stablecoin, and then the focus on investable product that we can embrace in this environment that is that has understandable risk to it. So, especially in a high interest rate environment as we're in. So that's where we're focused. That's what we see happening in the next little while. Keeping a constant focus on regulatory developments. For example, like we administer 3 stable coins now, meaning as an administrator, we're a rules enforcer. So we administer the collateral of 3 stable coins. I can tell you that all 3 of them are over collateralized. So let's get that message out. Let's get the acceptance of the use of a digital currency. And then we can start talking about the DeFi protocols that will replace some of the terrible processes that banks force us all to go through every day. So
Bruce, that's fantastic feedback. Thank you so much for doing that. Wallace, I'd like to throw it to you for some final comments. And if you're interested, Jathan or JJ's question about a hedge fund or mutual fund as a DAO, if you have any questions or comments on that, otherwise we'll just give you the mic to give a final comment on anything as you kind of close out this.
Oh, sure. Yeah. That's an interesting proposal, right? And I think it has been explored before. The issue right now is everybody is waiting for the regulatory decisions on a lot of these things. I mean, it has to be done in a regulated environment, and so technologically, there are some other challenges as well, such as cross-chain communications, integration off-chain protocol, off-chain communication with on-chain data. So yeah, I mean, I think this is the direction we're going, but it is premature at this point.
Thank you for joining us, David. Let me give you a final word if I can, and I guess I'd like to say, how are we going to see Invesco in this space, right? What are you hoping to get out of this space? And I'm I'm not prompting you to make any announcements here, but if you want to, the mic is yours.
Thank you. I mean, I think I think Bruce makes a good point. This is still very, very early, and I think that the view that we have internally is you don't want to be trying to learn everything about this space at the point where it really does start to gain traction. So I think a lot of the effort that we're putting in now is focused both with our partners and internally in terms of educating people and bringing people along that journey in terms of what the potential for this technology and capability will be. Certainly, as I mentioned earlier, our initial kind of explorations and discussions are very much focused in how can we bring some of our really good investment capabilities in that private market space available in a more seamless and integrated way to clients and to a wider audience of clients. But I think as has been made clear, just because there's a lovely comment that somebody made to me recently, tokenization doesn't turn lead into gold. So the constraints you have around product structures today, just because you tokenize it, they don't mysteriously disappear. So being respectful of that regulatory regime, and that regulatory regime is nuanced around the globe and is still rapidly evolving. So we will work within that framework, but I think that's where our initial focus is certainly going to be.
And I think that a lot of us, as particularly as we work globally, Sanjay and I are both in Dubai, Oyi is in Singapore, David, you're in London, Bruce is in Bermuda, Wallace, I believe you're in New York, is that right?
Mm-hmm.
Yeah, I mean, we're literally around the globe. Carrie's in Chicago. I mean, we're literally around the globe working on this 24/7. And principles-based regulatory solutions give you the freedom to innovate. The problem is the regulators incarnate that principle and articulate that in a specific point. Sometimes that is a tough point to understand. And I mean, even just little things like custody where there's a multi-custodian swap of a security. Right now, everything has to be within a single custodian, and delivering that messaging system and ensuring that that messaging system, and this is something Inveniam is working on right now, that that messaging system between is in fact not a custodian or settlement function, but just acting like a fix hub or a Swift. And these are things that regulators are still figuring out, but I think once we get to multi-custodial settling of tokenized securities, which we're a quarter or two away, we're really going to be off to the races as the entire end-to-end solution is available in an ecosystem with partners like all of you delivering various different elements, from the product that David, the administration at Bruce, Oyi, the end marketplace, and Wallace, you as an implementer. So it's good to be with all of you. Thank you so much for being with us. And it's Chris, we can't tell you how much we appreciate you being our host.
Thank you for having me, and everybody, thank you so much for the time, the insight. Again, this is 2 of 9 in our webinar series, the tokenization of securities. So thanks for joining us. Please share this video with your colleagues, and there is more to come in the very near future.
Thank you.